Hey, control the trade here. We're doing a follow-up video on NIO. Did one a few months back, and it's cool to look back and see where the price came into and how important these numbers were and still are. So let's kind of scroll back. I think I started to chart this way back. There was one number where it hit. Yep, right there. This is probably back in January. I think I did the video. So the high was 487 here. So 490 was important. Let's take a look at the chart here. We close under 490. We close under 490 again, and look what happened. That was resistance, resistance. We tried to bust through. There's a fake out right there. We went up to another resistance point that was actually referenced in that first video, if you watch that. Major rejection. And then we closed very poorly, and watch what happens next. So you head all the way down to the 200 period. Moving average broke that. And that was March. I mean, March was just March, obviously, with everything got clobbered anyway. But then it had to get its footing again. I haven't actually looked at this. This is completely off the cuff here. So then we came up here to $4, got rejected again. Let's see what happens when we get to, this is really cool. We had a nice close here, 470. But notice when you gap up, usually when you gap up, you go over what I'll say is an important number because it has trouble breaking through. So what it'll do, it'll gap up. 470 was the close, and we opened at 5, right above 490. That tells me that 490 was important. That was a good job charting because, I mean, that's just not a coincidence. So then we go up, my next number was 6. And let's see, opened, look at this, another gap. 2 gaps in a row that hit the numbers. 560 was the close, opened it a penny above 601. That's interesting. And then we did a little consolidation, hit another move here. I don't think I had anything charted above 6. I'd love to look back and see if 790 was one of the numbers I could have charted here or somewhere around that. But now, to me, it looks like it's coming back down. You have the 20-period moving average here at 631. You have my line at $6. You have a couple gaps to fill. 50-period moving average down here at 463, but you also have 490 on my chart, which will get filled with the gap. So I'm going to set alerts here for a little bit over 6. See what happens when it comes into the 20, what happens when it comes into my number of 6, what happens after that. And if it breaks down below that and below the low of this candle, which is 592, you can bet that $5 is not too far off and filling this gap. So if after it does that, if it has a nice reaction off these areas here, it'll probably get another leg higher. You'll probably get another short squeeze out of it. But if it breaks down, then look out below. You have all these other moving averages that will serve as support, the 100 and the 200 period moving average. But that's way far off unless some type of black swan event happens or something big. But for now, in the short term, which is what we look at. Keep an eye on that 20-period moving average. Keep an eye on 6, and take it candle by candle. Thanks for watching. Remember, don't let the trade control you.